Welcome back. Yes, crypto peeps and friends. It's me, the Crypto Sniper, coming back at you. Yep, glad to be with you and hope you're doing well. So what are we going to talk about today? We're going to talk about Bitcoin. And I know some of you are kind of excited, you know, the whole grayscale ETF thing, approved, woohoo, woohoo, all of that. And why I'm circumspect about Bitcoin and the crypto markets currently. So you're going to hear more about that. And in actual fact, we will be going short on a well-known alt name, and we're actually anticipating 66%. Ooh, no, but close enough to be called that in a market cap decimation for this prominent crypto. You can find out what it is. You just know what to do. You got to hit that first link below, book a call, and be part of our community. So we're looking at that. We're going to be going short. We're discussing that. We've got our positions on. I'm already partly in. I may be adding to that. In actual fact, that points to me expecting a bit of downside. I've spoken to you also about the USD-T. .D, that is the tether dominance. It's pulled back a little bit recently, but it is very much moving in the direction that we expect it to do in terms of the move we expect it to have. To the upside, bad for crypto, generally in our overall opinion. Okay, let's get straight to those charts and get on with it. Bitcoin, the God market as we call him. And I'm going to show you here, we're off on Stamp, just because it's got a great old history. It seems to bundle along quite merrily, does Bitstamp, never being in the news to any great degree. Here's the great concern we have for you. And in actual fact, it's something that's not on here. And generally, I save most of my volume analysis for things I do inside the community. But I'm going to do simple histo volume very quick with you here. And actual fact, you get varying data. I'm a bit circumspect about the quality of data that the exchanges are giving on volume. I think they're thinking, how many people are actually looking at these numbers? How many people are serious? We bundle together whatever we think we can get and we chuck it out. So sometimes I think there's sketchy volume, especially when you get these very flat, every day the same, and then a step down, another 3 weeks at the same level. You know you're being fed garbage. Yeah, it happens. I'm afraid, people, you can't trust everything. You got to learn. You got to learn. If it don't look right and it don't smell right, don't trust it. But generally, I think a reasonable attempt is being made most of the time. But I treat it proxy. I don't treat this as an exact science. So that's my approach to the volume data on the histogram kind of variety. It's actually one of the only places I'll allow a moving average, just because I want to know, okay, roughly where is the volume trending. And histos are not price, they kind of individual bits of data. So in terms of Bitstamp, just to give you a little bit of history, and we're going to do couple of other exchanges because of that volume issue. You're not going to get a consistent message here. This is what I'm going to be illustrating to you. And whenever that's the case, you can't overweight that as a typical reason for what you think is going to happen. So price behavior and patterns and the actual candles are the determinant for me always. However, when I have good data, things like that come off stock exchanges on equities and that's generally going to be a lot more accurate on the whole, but you've also got to be suspicious of something that looks weird. But generally, I think it's going to be a bit more accurate. I'm a bit circumspect, as I mentioned. So just to give you a highlight of that news on the upside gain that was achieved there, that price move came on that volume in Bitstamp, which is a pretty stable history. It's been a moderately sized exchange, which hasn't gone through big fashions and out of fashion, you know, like Bitfinex was the biggest and then it got dumped on, and now Binance is getting dumped on. We'll look at both as big exchanges, but you'll see you're not getting anything consistent. So that is the overall move. Just to highlight, the sell that occurred there was actually higher. And in fact, the lead into its spill, there were actually 3 or 4 candles, and the aggregate total volume of that down leg is larger added together than this big ass fundamental news event. ETFs are here. This is the moment we've all been waiting for. We've been given the story for 2-3 years, waiting for the ETF. The ETF is going to launch Bitcoin. That's going to bring the institutions, because they don't want to go into these sketchy offshore exchanges. They need a vehicle and custody. Whoa, help the poor little institutions. They're not allowed to do evil things, and all that malarkey story. And it's the truth of the matter, it's going to come, but the institutional buying is not suddenly just going to lead to this binary situation where you hit the light switch, boop, and then it goes ching, and then here comes 6 trillion, zwoing, down the pipe. Bitcoin, zhudge, goes from a half a billion to 6.5 trillion. I'm sorry if you think that's going to happen. There will be a transition potentially of institutions, and it could come, but not in an economic environment that is uncertain, where there's so many things going on, risking up. And believe you me, to institutions, you have to understand, Bitcoin, getting into Bitcoin and proxies for Bitcoin like an ETF is going to be risking up. The fact that BlackRock will want, and they will bring huge amounts of money in time, but also remember, they're either already quietly accumulating in proxy vehicles and have been doing so, flushing the retail guy out and ensuring most people. I mean, my concern is if most traders and most investors that didn't hodl, that were in from the early days, 2010 or 11 or 12, probably had huge amounts of Bitcoin and probably have significantly less now. Why? Because they got sucked into over leveraging to greed is good, or doing other things and selling the lows and buying the highs on an investment cycle when they were in peak pain, all sorts of things. So in some senses, I understand the original gangsters, if you were in super early, that could have hodled all the way, although we will still tell you on making 1 or 2 macro decisions a year. Just as an investor, if you were an investor in just Bitcoin, you could have well outperformed and not taken the crashes from the 64, 69K highs all the way down to the 15K lows, albeit now at 27,000. You can actually be better off by making 1 quality decision a year. And some years you wouldn't even have had to make 1, maybe 1 or 2 years you can make 2. And let me tell you, the multiplier on that is absolutely vast. So when you join our community, which many of you will be doing, because many of you are already doing so as you get better, wiser and smarter, when you do, you don't have to become a 9 screens trader jockey. In fact, I'm faking out here. There's not 9 screens at all. There's just 2, and that's all I need, and I'm quite happy with it. So we are not we're not tradathons. We're not 5-minute thrash and cut traders. So let's go have a look at the chart and get straight back to it. So what does this volume tell me? Actually, it's not really such a big deal. The market on this exchange, it's actually a lesser deal than what made it fall by quite a bit. If you add those 4 candles up and those 4, this is probably 20-30% bigger. Okay, well, maybe it's just a Bitstamp thing, you say. So okay, let's go to a different exchange and have a little look, because there are differences. Bitfinex. Now, unfortunately, that ETF little news dongle is enough to hide the entire volume. That's right. News, let's see if I can make it go. There you go. I've made it go. You see that? You might need a magnifying glass. Let me just help you there. My screen's on the left, so excuse me if I lose eye contact for a while. I kind of see it, I think. Okay, well, if you compare the sell-off that occurred over there and the volume that occurred on Bitfinex over here, this is tiny pippy. It's not little pippy, it's tiny pippy. Yeah, it's tiny pippy. So that's where you're at on Bitfinex. And in fact, that same sell-off is even bigger, I would say, if you take the 3 or 4 candles, particularly the main one. But if you just cluster the 3 or 4 that were around the sell-off and the 3 or 4 that are around the buy, this is an even smaller non-event. So yes, you've got the bump in price. The engagement on that price, remember, the market is priced at the margin. You've got a flickering of little retail people that have run in. If you think that's institution, it's a very small single institution. It's a mom and pop shop. That's the institution is, and that ain't an institution. So that's Bitfinex. Okay, well, we'll have a look at a couple more because it's, what about Gemini? Again, small, a little bit bigger than the sell-off on Gemini, but compare it to the surge over here. That volume. This is your big news that you've been waiting for 4, 5, how long have I been in crypto now? I was about 16, beginning of 16. Look, we've been in this game watching it, and the whole thing was always Bitcoin ETF. When the Bitcoin ETF comes. This was the second coming of you-know-who. But it isn't. It clearly isn't. It clearly isn't. The volume doesn't tell you that. And again, look at the sell-off here with FTX. That was real news. That was real pain. Look at that volume there. I will move it so that you can see a little bit more of it. And that was on Gemini. It is just absolutely inconsequential. It was a little news-driven day. We've had non-farm payrolls. By the way, non-farm payrolls this Friday, tomorrow. Massive data indeed. That will be coming out, and this is a seminal one because it's Northern Hemisphere back to desks day. That's right. So the bulk of all trading floors, the bulk will all be restocked with the trader kids, and they will all be at their desks, and all the problems of the world will come back into focus, and we're getting ready for the autumn run for Northern Hemisphere into Christmas, and there are a lot of downside risks to contemplate during that period, and we often get seminal moves and pivots. So this particular labor number that you can join our live trading day for, yes, pop below, look for the link. We'll probably pin it at the top there for you to find it. You can join, not a large amount, $197, hour and a half of traditional markets, which will include dollar analysis, which I'll bypass for a second today. Much deeper dive on the FX because it's meaningful for crypto, and of course an hour and a half of crypto analysis. And you may even get a look in at who we want to get short. Ooh, no, sorry, can't do it. But you'll learn a little bit about what we're looking at generally. So anyway. This is not particularly dominant move. I will go one more time, and I got told, and I don't know, but that if you go the Bitcoin market cap, the crypto market cap, you should have all the big players in there. I will also show you Binance super quickly, just so that we tip our hat, because it's still, I think, the biggest exchange. But it has been hit hard recently. This is clearly an example, by the way, of bad volume data. That is not facts. You didn't have umpteen days in a row all at the same price. So when you see that, bad data, friends. Don't base decisions on bad data. But anyway, this is more like what you would expect. You had a sell-off. Why is that red? Actually, the second one is red. So this is interesting. He's just brought up his own question and answer here. So let's just be clear. On crypto cap, and somebody smart will tell us where you can find the formula as to how many exchanges are involved here, which are the big ones, how many of them they got, are they adding all the volumes together that are the official data, etc. You're smarter than me at that, guys, but this is the data we are being given. So I'm taking it as it comes. So the actual bull day, which is the third last day. So we're at today, then there was yesterday, and then there was the news day. That one is that. Now, do you know what I'm going to say to you next? Well, the take profit on the news, the insiders, that came on the next day. Let's go TG Pink, and we'll go here and take an arrow. That day, the red one that traded down, is more than double. It's about 2.5 times the volume of those who bought on the news. So a bunch of insiders probably got long here and here, which would have been there and there, and maybe some others along the base here. And on that news, you got that much volume on the day and that much selling volume. In other words, they were waiting for that before they unloaded because they're not wanting to hold, and they knew there was some good news coming and they would sell into that good news. So some degree of insider, I would guess, because the actual buying would only have been retail buying on the day. That's why that is actually quite low. And the selling is the buy the rumor, sell the fact crowd. Maybe they guessed, maybe some people guessed that it was good. But I would say there's a lot of insiders that making a quick buck at your expense. If you haven't realized, the world is corrupt and bent, and people get information that you don't get, you'll never realize it. So in terms of what should be an aggregated proxy whole of all volume. So we're talking quite a lot about volume today, and it's not something I've done before. This is not. And what does volume mean? So step back, step back, step back, step back. What's the significance of volume? Volume is the degree of participation, which is like, and I'm going to give it to you like this. It's an amplifier. So you guys are musicians. One of you is a drummer, one of you is a bass guitarist, the other is a lead guitarist. You need the sound, and all the amplifier does will tell you how big or significant it is and can make bigger. Yeah. So big volume means highly significant piece of price behavior. Minor volume means just a little bit of flickering trade at the margin, no real opinion, not so significant. So it's not the instrument itself. The price is the guitar, the drums, the bass. That's the price. However, bigger volume, more amplification of significance. You get that? That's the proxy. Okay, so the amplification has come on the profit taking, not the move up. So that tells you that thing is baked in. If the data is correct here, which I'm assuming it's going to be decent. It was obviously shoddy once, but maybe it tidied itself up once we stopped getting the, don't worry, son. Mommy, everybody at school keeps calling me a square. Don't worry, son. Anyway, that's the volume. Now it's better. Let's hope so. Okay, off we go. So now we talk about the Binance. So Binance is the last one I'm going to throw at you. And then we'll do Tether, because I have a feeling that the Tether exchange pair is probably the largest for Binance. So here you go. Binance. So, by the way, you can see recent history. Look at that. Now, why did Binance USDT drop so much? Well, they were the most dominant, they were clearly big volume here, and then they've had their issues. So this has got a little bit of a Binance story in it as far as I'm concerned. So I've said, okay, here's when everybody was attacking Binance and they're about to go bankrupt, blah, 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 news, FUD. Okay, so let's get this where we're just comparing the post once were kings and top dogs period to, you know, once everybody that was scared had left and whoever had stayed was stayed. So again, that buy is less significant on the most significant exchange, assuming it's still one of the most. And you have 4 or 5 days there that more than dwarf those 3 bull days. There's your insiders getting in there and there, your pop. There's not so much, which is why I say, I find it very hard to get a consistent narrative. You saw the crypto cap, which should be everything. They had huge volume on the last 2 days, which is post the news, the 2 red days, the red candle days. Binance, one of the biggest, but it's not like it was on crypto cap. This was the bigger volume. So do I go for any real, if the data points of entry are not adding up, do I go full ball on a volume-based decision? A, I never do. Price, behavior, and patterns are king. B, if I'm not getting a consistent narrative and I treat it purely as proxy and I go, the one thing I can say that was consistent across them all is that it was not an outlier significant candle of volume for any of them. Yep. Do you agree? That's one thing that's consistent that we can say. Say aye. Hit the like button while you say aye. Aye, aye. You hit the like if you agree. If you disagree, hit the dislike. Hit the dislike. Hit the dislike. Hit him. Say wrong, Francis. Okay, so that's the only thing I can come to conclude, is that it's not really an outlier, especially when you look at some of the moves more early on over here, the relief rallies, post all the FTX, the 3 arrows, all the bear, FUD, hammer me down. Actually, on nearly all of them, the earlier moves had the bigger volume. We are petering out on volume on this move right now. Now, originally you'll say, but, you said inverted head and shoulders, and now you're talking other stories. So I'm going to just take the volume off because it gets a little bit in the way now that we're talking about other things. We'll let the volume go. Yes, we did say inverted head and shoulders, and it was going according to plan. And in fact, the best part, it started incredibly strongly. Now, sometimes breakouts can start super strong and fizzle. Sometimes they start super strong, stay strong, and consistently go and meet their targets. But they can pause for a bit and go to targets as well. What has happened here is that you came super strong off our 19.9 call. I mean, that was really strong. You respected the neckline pullback and then continued strong right the way up to there. Then you started to slow down, but you still had a mini surge. You did the full revisit, which is fine. The problem started here. You got the pump that we called for on the 24.9 again. You got the pump, everything hunky-dory. But then you failed to go higher and you started broadening. And broadening structure is a problem. And then you skidded, collapsed. And now it's a second time return move. And now you're sitting here with low volume here when you had higher volume here, and even there. So what does that say to you? I'm helping you make these conclusions yourselves. I'm just trying to show you where to look. I'm like the dad who grabs his kid's head and turns his head and goes, look, you're not going to find these Easter eggs, son. Try looking over here. They're melting. You know, my dad used to hide the Easter eggs in the garden. It was Africa. They melted. It's like, look here, son. Let me just help you. Let me take your face and put it here, right in front of the egg. Maybe you can spot it for yourself. So I'm helping you do the Easter egg hunt here in a most ungraceful way. But anyway, I want you to get to the right conclusions. Higher volume here in these surges, and lower volume here. And this is your grand ETF. This is it. You've been waiting for this for 4 or 5 years. I certainly have. We were talking about it since the first time I showed up in Bitcoin. And that's it. That's it. So what does that mean? Where am I going? A little bit over-egged the point, but hopefully you've got it. This is the kind of rally that I expect to fizzle. And in fact, this entire move is now overstayed its welcome without sufficient new progress. There is always a time limit on everything. So you go, but you change your mind. You were a bull. You're not allowed to change your mind. Can't do, false, cheating. No, and no. Everything is contingent on consistent progress and continual compliance. The minute you start going off-piste, you're going off-piste. It's no longer riding on the road. It's simple. And this started going off-piste. It started losing momentum. And it started to set up very close to our original neckline of 25K, which was our reversal call. Another possible head and shoulders. You'll note on Finex, you were a super sketchy wick down here that actually made the 25K much like that. So actually on this exchange, even though the bulk of the candle behavior is over here, tiny bit higher, you are already in the left shoulder. Marginally higher high means head, skidding and then capitulate head. And now we are asking the question, could you be? So the whole point about being ahead of the game is seeing a possible pattern before it is. Because by the time it is, everyone else has seen it, you're late. So scenario casting is why we have that phrase. It is a scenario. You don't buy into it that you're belligerent and you can only see that scenario happening. That's a forecast. That's why we needed a new word. I forecast the Springboks are going to win the Rugby World Cup. That means I don't see the possibility of France, the home team, winning. I don't see the possibility of Ireland winning. That means I block my brain on and I'm getting confirmation bias in everything that happens. So the minute you say a scenario can be, allows you to have other scenarios, and you have ones that you give percentages to. So now you're sitting and you're doing a probability-based assessment on all the things that could happen rather than being mono. Yeah? Okay, so that's the mentality that you need to have. So this little rest here, it's now 2 days in for the rest after going only 50% up of the entire spill down. So that's the full spill. And actually on other exchanges, you don't have that wick all the way down. So it's not a perfect head and shoulder on all the other exchanges. We'll look at a few others. Again, exchange variances. And this comes, let's talk about these exchange variances of degree and pattern. Do the technical analysis on the exchange you trade. Always, always. However, if you are getting the same underlying in crypto, Bitcoin, dollar, and they are very variable, that tells you that it's probably quite light volume, and there's some areas that are more skittish than another. It's not a really good market. You trade the Euro USD, guys. It doesn't matter whether you're on Oando or you're on FXCM or whatever the case may be. Literally to the pip, those things are synchronized. You're not getting a saving by waiting real quick to click on a different one and sell, do something different on the other. The arbitrage is almost impossible. When you have the lighter markets, you tend to get these little skittish moves. I'm actually surprised that crypto, especially on something like Bitcoin, hasn't arbed the whole thing right away. And that you get greater consistency. But in the spill here, you actually, according to this, on Finex, and this usually happens with light volume because you don't get to make money out of it. It's a fake arb. It traded as low as 24,713. Look at that, the low up at the top there. That's over here. This low over here. When I put it on the candle, 24,713. And if I go somewhere else, the lowest low, if I go to the same candle, that's that one, the low is 25,601. That's like $1,000 virtually. And even if I take a different candle where it was the actual low, it's still 25,350 when the other one was 24,700. So, that's quite a lot of dollars. If you could buy millions at the cheap price and sell them all simultaneously at the more expensive, forget about it. Nothing traded. And sometimes the data, the price data also on these things. In our short, Finex has a higher wick that went through my limit order and didn't take all my size at all. Only got a small amount, but on the chart, it's wicked through it. So there's a theme a little bit today in today's crypto update with you. Be careful about data, particularly in low volume, low volatility times, and then with the sudden news. You'll often find it didn't trade. On our key short, as I said, there's a wick that went way higher than my enter short. That's the alt that we are expecting. 66% down. That's right. You can find out. Click the link below. It didn't happen. It didn't trade all the way up there. I know it because I had a limit order lower than that, and the whole thing didn't get filled because I was wanting to get a bit of size on. It filled barely 5%, yet shows a wick way above. So I don't even know how they did that. Either the data on the price is wrong, or they did actually let somebody trade there and didn't honor my limit order. Who knows? This is a little bit of the fudge factor. So especially on low, and another reason, key learning. Listen, learn why we trade big time frames. You're more likely to get your daily data tidied up than your 5-minute data. You're less likely to have meaningful errors occur as a count of wick lows and wick highs as a result of low time frames than you will on higher time frames. So don't trust your data. If it doesn't look right, cross-reference multiple reference points. So not only do we do cross-market analysis, Bitcoin against other tokens, against other currencies, USD, I'm going to show you the euro in a second as well, do it on different exchanges and see what's happening. And then if you're doing volume analysis, definitely on different exchanges, because we're getting a broad variance of volume varieties and themes. But we do know, we still managed to get some information. On none of them was it a highly significant day. It was a moderately more significant day on some of them, but it didn't reach any of the previous pump volume highs anywhere close. And in many instances, actually, the volume was less than the sell-off just before that sell-off over here that we were showing you. Okay, so move on. Bitcoin Euro. You see you get a bit of a better dip for the shoulder on the Euro. And that's interesting for the same head and shoulder. So we call this, where did you armpit? And if the neckline is the 23.6, let's just say, those were your armpits and they shrink wrap your head. So we see the potential for a shoulder. Now, at what point is the head and shoulder like probably a primary base case scenario that I'm discussing? I'm not going to discuss any others with you. We can and will potentially do something like that inside our community. But I'm just putting one scenario that is a dominant scenario for now, and it can be thrown away. I'm not married to it. It's not a forecast. People go, you're wrong. No, it was a biased probability scenario. There were other scenarios, and it started to fall out of favor, and other ones started to stand up more strongly. That's the process. That's the process. As you're getting in new data, what's the most likely thing to happen where there are multiple outcomes possible? So in this particular scenario, it's even cleaner as a head and shoulder because it's got a good dip to the downside. And that's on Bitfinex. So you say, well, Bitfinex was one of the ones on the dollar that had a good dip. What about BTC Euro and one of the others? It's still a good dip on Bitstamp. What about BTC Euro on Binance? It's still a good dip. It's a tiny bit deeper. All of these are making the 23,600 at the wick level. This generally is a slightly deeper armpit though for us. So that's where we're at. Now you start with your move quite strong. What's going to happen? Well, we've also got to talk about the dollar, because if the dollar is being strong right now, then it's not such a bad performance from Bitcoin. If the dollar's being soft right now, it should actually be firmer anyway. And this is actually, again, little pippy stories. So what's happened? The dollar has generally been firming for a sustained period. But more recently, it's pulled back and may even do a rollover for a head and shoulders. Let's have a look at that. So to the dollar we go, and we talk about the dollar index. So we have, if that is the case, what I've just said, we then have a situation where you have a supportive environment for crypto right now. So let's have a look at it. That's the daily. What's actually happened on the dollar? 1, 2, 3 down days. So you were going up. The last 3 days have been down. It's the first day in 4 that you're actually getting a bit up. You were, what date was that? 25th of August. My guess is that was last week. And that's Monday. So on Friday, you hit a high on the Dixie of 104. And right now you're at 103.4. So what was the high? 104.4. You closed at 104.1. And today you're at 103.48. So actually this has been a tailwind to Bitcoin. Dollar week is generally nearly always a tailwind to Bitcoin. And I've shown you in previous videos, multiple periods of history, that actually the halvening cycle is more akin to a dollar weakening cycle for giving Bitcoin support. So it's actually the dollar weakness timing that has been the more dominant That doesn't mean the halvening hasn't been synchronized. They just seem to all have been synchronized together. You've had real periods of dollar strength in bear markets, sustained dollar strength, that's on the daily and the weekly period, and you've had real periods of weakness. Just think of the dollar index run up to 114, all part of that bear market down through the FTX. It seems to be synchronized that way. So now you're getting a little bit of strength starting to come back. We've had a solid move up from the $1.99 all the way up to 104. Then we've been softening. So the dollar right now, I think, is beginning to base on the bigger time frames, daily, weekly. I think this was a capitulation. We thought, will you go to 97? There was a structure. It undid that. It sorted itself out and it started to come back up. And it's had a very sustained, lengthy period. It's entitled to churn a little bit and go sideways. Perfect for Bitcoin to go a little bit up, but not spectacularly so. Dollar, a little bit sideways, a little bit down, but not spectacularly so. During that period, Bitcoin gets a rally. So you say, well, so you're bullish there? No, because we're expecting a shoulder. We're expecting a shoulder to come. In fact, before I go back to the Bitcoin chart, let's also show you Bitcoin dominance. So we're on a daily here. And I've drawn the channels. I'm going to take that volume off on dominance. We don't need that. And you can see what we've got going here. We've got a channel. And Bitcoin dominance generally actually is not such a good thing. Very early bull run, Bitcoin dominance, good. Because Bitcoin is running first. If it's being the honey badger and it's starting the game before the alts kick alive, fine. But generally, over a bull market, you want to see Bitcoin dominance going down, generally, unless you're at that early stage, or there was a fork, like when Bitcoin Cash was created, everyone ran into Bitcoin to get the free token, Bitcoin Cash, where you get unique situations, that's unique situations. But in essence, there's no unique situations right now, and you've been getting the early Bitcoin dominance, and actually the alts have stayed relatively flat. There's tokens, good serious projects like ADA. Many people think it's the best for scaling, it's the fastest and everything, etc, etc, etc. Let's take it quickly, where's my ADA? There he is. And on the same time frame, look at that. This guy is a serious project, and this is what he's throwing out technically. Now, I don't know about you, but that ain't so bullish. That ain't so bullish. It is yet to really turn. This has the feel of 2019 about it. 2019, Bitcoin ran just shy of 14K. The alts did not perform. Bitcoin came all the way back down. We had a demand-destroying event in the forms of lockdown, bang, traded right the way down, 4K. 14, back down to 4. Those alts actually went lower. So let's remind you of that, and let's just show you that chart, because some of you will be going, yeah, I can't visualize it, I can't visualize it. Yeah, I can see these charts in my mind, and some of you maybe not so used to looking at them. Thank you. There you go. The fake bull that wasn't. Now, it actually was a good bull run if you got into Bitcoin and you got in early on the breakout over here, for example. That was a good little run because you could have gone to around about 13,000. Now, no one sells the top, but no one buys the bottom. We know. But even if you're a little bit in the general trend, you would have done. Bitcoin, yes. But if you split your screen and you put someone else under there, it's a, well, we'll look at Ethereum, the second biggest one, shall we? Let's just do this again, kiddies. So, 10th of December 18. 10th of December 18. Bitcoin goes from a low of 3,200 up to 13,900. Not bad. Times by essentially 4. Ethereum, and back down here. Look at that. I mean, I have to log scale this. In fact, I have to log scale it. Bitcoin was log scaled. Sorry, guys. That was a cheeky trick. I didn't mean that. Sorry. They've added the chart below and they didn't add it in the same way as the one above. Let's make sure they're both log scale now, shall we? Yeah, trading view. Pulling tricks on me like that. That was super flat. Okay, so a little bit of a run up and basically most of the run back down by Ethereum. And Ethereum is actually one of the better examples. You throw any of the other, well, we can do XRP, a very big market cap token. Bitcoin, 3K. By the time of COVID, this one was cheaper. This one got cheaper. So it's the alts didn't participate to the same degree as Bitcoin did. That was a Bitcoin dominance only bull run, which actually saw the alts underperform. Now you look at all your AVAXs and your Sols and various other guys, and you will find that any of them that were around during that period, most of them underperformed Bitcoin, and Bitcoin gained dominance. Okay, so this has that feeling about it. This has that feeling about it, and that's why I want to warn you. This could be a little bit of a roll up. Don't forget the bent banana. We've spoken about convexity as well. You don't like the bend of my banana? Huh? Convexity. It's a bit of a doming out. Look at your half little big fizzle wick on your candle. Remember, going to big time frames and looking at large candles. Large candles. Oh, show me a big candle. There you go. That often puts things in perspective. You've got a half sold back off wick here on the big time frames. You've got this convexity doming out. I put a splitter on there. You're missing the other side of the mosque, the downside. Okay, so be careful. Be careful, be careful. There is caution to be had. There is caution to be had. We didn't follow through on our original reversal, and now the time is changing. So we're going to look at Ethereum and we're going to look at the USDT. So I'm going to take you back to the dominance, and I'm going to say, so far, you got a little bit of a sell-off, but there's nothing to worry about for the USDT dominance. Let's go 3 days, get it a bit bigger. Yeah, it's not logged me in. It somehow logged me out. I wondered where all my lines had gone. Trading view. So let's do that. This is still there, and it got a little higher and it's coming off a little bit for now, but this overall got a big layer of support under it over here. It really squared up, and that got a big layer of support under it. It's getting 2 big base plates coming up underneath it. So my expectation is we're going to have a surge in Tether, which means more potentially people being shaken out of crypto. So whatever Christine Lagarde, on guard, crypto and CBDCs, our Agent Orange, she's going to be doing whatever she's going to be doing, ain't going to be good for your private ass cryptos for a while, or there's an economic demand destroying event, or there is another lockdown. Who knows? I'm just saying. So who knows? These things are going to lead to a surge in Tether. In my opinion, that is still likely to occur. And when you break out above here, I'm afraid to say it looks like you're going to go a substantial degree up, potentially 10.75 plus percent. So watch out. So that points to bearishness. The price behavior points to bearishness. The volume as number 3 is supporting that this is not getting the degree of support the way it was sold. We were sold this was the biggest show in town, the ETFs coming to town. Grayscale's won their court case. Ripple's won their court case. And guess what? Up and back down large part of the way for Ripple. And Bitcoin, little pippy volume. Okay, well, I'm just saying that don't smell right. That don't smell right for me at all. There's no engagement. There's no volume. There's no engagement. This is a problem. So let's have a look at Ethereum, the second biggest of them all, and point out what I see technically here. So if I draw this fella, what do we see? I tell you what I think I see. I think I see a rising wedge. Marginally higher high. Big problem. Everybody thinks a higher high is good. A marginally higher high is bad. Because you've come from a higher place than there, but you could only go a little bit more. And then you fizzle back down. So remember, we talk about 3 impulses in a rising wedge. You can find out about this theory and a whole bunch more when you click the link below. Book a call, have a friendly chat with a trader just like you, who trades cryptos, traditional markets, and many more. And you could become a member in our community too. And you could find out what we are trading, learn and enjoy and trade off the back of our ideas while you upscale your skills. And of course, prepare for the wealth building that the reset event will present to you, because it's going to destroy those that are underprepared, and it's going to be the bulk of them. So preparation is key. 3 impulses in our rising wedge. We often talk about a bloated second one. Well, you could get a rally up to here and a fizzle, just as we feel Bitcoin, dollar a little bit weak and sideways, Bitcoin moderately but small pippy volume up for a right shoulder, and then there's something coming. September, October, maybe if it takes a while, into 3 weeks of November, something's coming. Something strikes me as coming. Well, look, the way I've drawn this points to 2024. So call me a liar. This year, I feel that something is could potentially be here. That is going to lead to a significant sell-off. So this doesn't look so good as a bottom. It looks more like a big structure that could see a sell-off. Now, it doesn't have to, I'm not saying that that's going down here. I'm just showing you the time frame here. You could fall some of the way. You could stay higher than you were last time. Doesn't mean you're going to fall below this low. Doesn't even fall, say you'll even fall as far. You might fall there, or you might just fall some part of the way, and you just have a setback. And then you try a base again, and then you come again, and now you come up with more momentum. Now there's a new driver, and there's quantitative easing, cause. We had climate lockdowns, and everything now needs XYZ, and everybody needs some furlough, and we're going to create more inflation because that's so nice. It makes the central bankers rich, and you could end up with some W bottom like I've drawn there in the blue. Who knows what that future holds? So the whole point is the bull period is going to get put on hold to some degree, in my opinion, on balance of probabilities, if the Bitcoin scenario of the right shoulder plays out a little bit higher, a little bit sideways, nothing too strong, not running the other shoulders high. I don't like to see that. That means there's too much strength. So we would expect Bitcoin not to go higher than, goes back up to the Bitcoin chart. That high point there, high was 31,000. That's a pretty high left shoulder, that 31, because you only went to 31.8 on Bitstamp there, and 31,000 dead, kind of. So you're only $800 higher. That's a terrible marginally higher, guys. You came from down here to there. Look on these big time frames when you look at this. You came from down there to here. You had a rest back down to a key level of significance, and you got there, and then you're down. So you jumped significantly less and only made a small bit higher, despite jumping from a lot higher off. 25K 19.9k. So this was 20k, call it, and 25k. It was a 5k higher jump. That is deeply unimpressive performance. And now you've done this. There's your candle. That's your ETF. That whole candle right there with this fizzle. Plus, live trading day tomorrow, don't forget. Big labor number to come out. What they're going to do, what they're going to say. There could be things coming. We often take new, fresh direction on labor number day, non-farm payrolls, which is why we do our live trading day collectively as our community, and even our self-study guys will join us. It's included for them. You can do that too. Ask your guy when you book a call to tell you about all the products. So there's different price points. You will see whether that happens. And I'm adding to it that September, the fulcrum of the end of summer. This is the end of the summer, the last of the days of summer going into the September period, particularly Northern Europe, where a lot of the money resides. It starts to get crisper already. You will find that people are back at their desks and markets take new directions. So this particular is the most important of the whole year. For me, for market directions. The end of August NFP number is the most significant. If you were to attend a live trading day, by the way, let me just empirically do it and say, what the hell, I'll throw 200 bucks to these guys there, see if they're any fun, and do I come away with anything? This is the one you should do. And if you don't do this one, wait until next year. I mean, it's not that we'd have great events on all the others, by the way, but it generally, that's going to be the one. If someone said to me, not including this tomorrow, what's going to be the next one? I'd say next year. If you have to choose one. So I'm really interested, and I'm doing nothing right now. You've got to learn to do nothing. Patience. So this is it, guys. That's your crypto update. Bitcoin, soft rally. Don't participate to the long side. I would possibly consider, if I got a great shooting star on the top of a right shoulder, a little bit higher up, I'd possibly even consider short, medium term Bitcoin short. We have already, however, an amazing structure, and I don't like to have too many trades that are correlated on in a key alt, that we actually expect a far bigger fall. And it will tie into a very interesting theme that involves the statists coming. Yes, so you can guess away at that, or you can book a call, jump on board, and see what it's all about. So thank you very much for watching. Hit the like, hit the share. That's it from me. Be careful out there in crypto land. USDT is going to be going up on balance of probabilities. Has been our scenario for a while, and it continues to be. Bitcoin has got a soft rally maybe to finish, and a bit of churn and a bit of chop, but generally we see weakness. We would rather sell straight into any strength than buy. And Ethereum is a rising wedge potential. So that points to an event this year still that could start this year. That doesn't mean it finishes this year. Start and finish. People sometimes, expect quite a lot. It could start during the course of this year, and I even think it doesn't have to be the 31st of December either. It could be September-y, which is just around the corner. Okay, till next time, I'll catch you later. Thanks for watching. Thanks for sharing. That's real currency for us. And thanks for hitting the like button. And don't forget to subscribe. And hit always see the sniper. Bye-bye.